Welcome to the Money GPS. You came here for the truth, so let me unveil that for you. Do you know what the central banks fear the most? I'm going to show you that today. I'll give you the history behind it, and I will give you every nuance. Let's begin. This is a speech from 2002, and it is what I consider to be the most important fact that you're going to find regarding the Federal Reserve, at least for their most recent history, okay? So you can see this here directly from the Federal Reserve's website, remarks by Governor Ben Bernanke. So this was back in 2002. Deflation is the title, deflation, making sure it doesn't happen here. And if you read through it, they talk about all the different things that could be done to ensure that deflation will not happen. And this is so key to understand. I'm going to go through the details today, but if you stick with me here, as I just show you, one of those things is literally a devaluation of the currency by 40%. So you are watching today all of these factors that are really deflationary. Okay. And what did they do instead of allowing it to happen? They pumped it up in 2008. They pumped it up in 2020. What's going to happen the next time? Who knows? But I can tell you their biggest fear is deflation because they can't control it. They can't do anything to have that impact long term. What they're doing here is all short-sighted. Printing money, you're short-sighted in doing so. And that's what they've been going through. And each cycle, it becomes more and more violent. So in this one, if you want to check it out, if you haven't read it, please do. Read through it one time. It's not that long. And you will be able to understand the mentality of the Federal Reserve. It is really telling. But the key thing that for this video is the fact that they're willing to devalue 40% against the US dollar. In that case here, I believe it was referring to 1933 with gold. But anyway, the point is, hey, if we've got to inflate, we're going to do it. You see some examples today of what happens when a currency loses its value. And the most relevant thing I have for you is Argentina. Argentina turmoil sparks panic buying and price hikes. So we watched the chaos. I talked about it years ago, and now we can see that it's starting to take hold. It is important to note that it's not just Argentina, but we have seen it in many other countries. Look at what's happening with Iran today. Look at Turkey today. Look at other examples where people, they say, I think it'll get better. I think it'll get better. And it doesn't get better. It spirals down because once you get into this mode, you simply can't get away from it. We're so worried about this deflation, we will inflate all the time. And of course, there are different factors, and Argentina is not the US, and Turkey is not the US, and all these things. But we need to understand the depths of it all. Overnight, 20% price jump supercharges Argentine inflation crisis. Think for a moment here for yourself. What would happen if you, the individual, you go out tomorrow and everything is 20% more expensive? Your food is 20% more. Your fuel is 20% more. That has an immediate impact. But even if that happened over several month period, it's still devastating because people think, well, I'm going to shop there. I'm going to cut this. I'm going to cut that. And before they know it, everything is too expensive. That's happening today. As they go out there and try to prevent this deflation from happening, they ruin your currency. I'm going to show you some deflationary factors later in this video. Stick with me. I promise I'll give everything you need. Businesses hike prices after parallel foreign exchange rate dropped 17%. Retailers, consumers seek to stock upon goods before they increase. Of course, stock up on goods, I would read that. But the way that they show it here is simply what I've read in Weimar, Germany. I've read in other countries as well. If you think about this, if you assumed that prices were going to be more tomorrow, what would you do? Well, you'd buy more. And so would your neighbor. And so would your family. And so would your coworker. And everybody buys everything up. And of course, that has an impact like we saw during 2020. Now, for people today, if they wise up to this information, they should be doing the same thing. They should be buying what they believe is going to be more tomorrow. Now, I'll show you in a second here, food prices have escalated and, for the most part, haven't really come down at all. But it's really anywhere where we see a lot of preparation involved. So maybe your celery doesn't cost, $9 today, but a lot of the packaged foods, a lot of the animal products, those cost more money because there's preparation, there's processing involved in that. It's not direct correlation, but the less processing involved, it seems to have less of an impact. This is about the jobs numbers because we take it from the inflationary factor and we see what's happening with what they're reacting with the stimulus packages and everything. And what about the jobs? In the previous video to this one, I talked about the job situation. I talked about how this would have a direct impact on people. And it's so funny to see the manipulation of the jobs numbers. If you haven't seen that video, the one directly before this one, I highlight it all. How they manipulate the data. I'll show you some more in this video here later on, but I wanted to cover the fact that there's another blowout jobs number that came out, and that's going to stiffen the resolve at the Federal Reserve for a 3/4 point interest rate hike. What are we talking about? 0.75% increase that came before and will likely happen again. It's just a couple weeks away, and we're looking at this at a time in which the market started to believe, they're not going to do it. They're not going to do 3/4 point. It seems likely. In fact, already Atlanta Fed president said that he supports raising the benchmark rate 75 basis points later this month. Why? Specifically citing the stronger than expected jobs reports. The jobs numbers, according to them, this is like the data they use, okay? Supposedly inflation has come down in many factors, just a little bit, but that, the suggestion here is that inflation is peaking, it'll come down based on their data. The jobs numbers looking good, okay? And you see there are other factors anyway. Unemployment rate super low, the fact that there's so many job openings, like all these different things. The Federal Reserve, and by the way, yes, the stock market is way off its highs. But when you look at it on the whole, I mean, it had performed extremely well from the bottom of 2020 up until now as a whole. So the fact that some of the froth has come off the top, none of these things should concern the Fed, and they will just continue on. 75 basis points is most likely. The prices that people pay today on everything from energy to food and so on, there are many factors. The central bank thing is underlying all of it. But understand that there's geopolitical factors, there's shortages, there's supply chain, there's artificial scarcity. This is one that I wanted to highlight for you. Putin is set to halt gas, and Germany fears it's not coming back. Maintenance on critical pipeline to Europe is an opportunity for the Kremlin to further squeeze the continent. They're pushing back. Okay, this is a two-way street, it seems. And what's happening here is that Germany, they shut off their nuclear power. They basically said, we're going to be heavily reliant on Russia, even though we keep bumping heads against each other. That sounds like a good idea. What about Japan? They had their issues, and then they said, okay, we're going to import a lot from Russia as well. So Russia really winning in this case here. Germany dims the lights to cope with Russia gas supply crunch. Fears of winter energy crisis bring call for shorter hot showers and cooler swimming pools. You, the individual, are suffering today. This is unbelievable. Prices will continue to rise, especially for people in Germany right now, because it's not as if you could just, turn this around in a second. Look at what happened with the flotilla of all this LNG, natural gas, being sent from the US to Europe. But also, I said other countries in the previous video, one of those countries being China. But you see this. And they're taking it from the petroleum reserves that you would think would be from like a wartime emergency or some disaster happens or so on. It's being sent to people that or countries and so on and companies that maybe not the best idea. And you, the individual, this is the important part. You, the individual, have to pay more as a result. That's what it ends up. Look, rice faces squeeze on higher fertilizer costs and booming demand. This is still going on. I just want to highlight that prices are still rising. You, the individual, if you believe prices will be higher tomorrow, there's one very simple thing is just buy what you can. This is the World Food Price Index, and yes, it has come off its high, but it is still truly excessive. You can see that yellow line going across. That's the Arab Spring and the prices that triggered that. So we're beyond that. Okay, that's how amazing this has been, and not amazing in a good way, of course. And now, deflation. I've talked about this before, but let's highlight some new information. There's still over $40 billion in cargo on container ships waiting offshore, 64% of waiting ships off the East and Gulf coasts, just 36% off the West Coast. So this is just telling us here right now that there's still, despite Walmart and Target and all these other retailers saying we have way too much inventory, there's still $40 billion of it sitting, just waiting to come in. And some of that, I'm sure, is needed right away. But I believe that we've got way too much because it's called the bullwhip effect, way too much stuff. What happens here? Deflation happens. Suddenly, the retailers start throwing up discounts left, right, and center. And then, if we get a serious deflation and this takes hold and starts to pull everything down, drag everything down with it, what comes next? Can you answer that question? What do you think it is? If everything starts to fall down, what would Ben Bernanke do? You know? What do you think? Let me know. Now, this is about the jobs numbers. I want to highlight this really quickly. I forgot to include it in the previous video, I think. I just want to make sure that I note this for my subscribers who follow each and every video. You will understand that this is, look, just if you haven't seen the one before this one, definitely check it out. This is the 1.5 million jobs differential in between the establishment survey, the one that you see, the jobs numbers, oh, everything's so fantastic, and the household survey, which uses different metrics to calculate what's happening with the jobs numbers, because they're not literally counting every single job. It's based on selected data. And now look, big difference, isn't it? Okay, so watch that carefully, because it's going to tell you what's actually happening. Has something broken? And are we now turning downward? Is this the deflationary pull? Despite all the stimulus from 2020 and beyond, despite all the from 2008, 2009, this is another one. Housing inventory is spiking in some parts of the United States. Not everywhere, some parts. And we're coming off extremely low levels, certainly, but it's still extremely worrisome. When inventory starts to, spike up, now people have options. The only reason why we saw housing prices going up like crazy was because, hey, that's the area with a nice school. It's a safe environment. They've got, the Whole Foods over there. They're, reasonably close to the highway. It's got everything we need. But there's only one home in that entire neighborhood right now. You want to make an offer? Well, you got 10 seconds because that thing is going to sell. That's what was happening. And now that's changing. Now it's not one house. Now it's not 5 houses. Maybe there's 10 houses. Still not 100 houses, still not 1,000 houses, but people have options. Buyers have options, and this is becoming a buyer's market rather quickly. This is deflation. Healthy, but how far does it go? That remains to be seen, okay? And I'm going to end it there, but I hope you appreciate it. Hit that thumbs up. When you do, you support the channel. I hope I've made this video easy to understand in what I do, the way that I show you this. There's a method to my madness that I don't always get to the points I want to or that I have intention to. But this information, I believe, is really critical because you're looking at all of this. It's a mess. Everything out there's a mess. Who do we believe? Who do we trust? The data doesn't lie. And when we start to what I call triangulate, simply that, we look at the jobs numbers, U3 unemployment rate. Okay, that's one piece of data. But that U3 unemployment rate is going to tell a very limited set of data for the whole picture. So we start to add in labor force participation rate. We start to add in how many job openings there are. We start to add in what's happening with wages and what's happening with this and that. And then it starts to tell a much more broad picture, or a much more clear picture, I should say. And so that's what I try to do. And I there's impossible to get it done in one video. So if you watch each and every day, you start to understand everything as best I can anyway to deliver that to you. So if you want to be part of the crew, 282 crew, hit that subscribe button down below. I want to give a thumbs up to all of you who join me each and every day. Thank you for being here. I really, really do appreciate you. Okay, I'll see you on the next one. Take care.